everyone, and thank you for attending our Avalara webinar titled How to Cut Costs, Not Corners. My name is Brittany Herman. I'm a marketing specialist here at Aktion Associates, and I'll be monitoring today's event. This webinar is designed because many distributors can find difficulty in keeping up with tax compliance, and we want to use this as an opportunity for you to ask questions, so please feel free to use the Q&A feature during this event, and we will have time to answer them towards the end. All attendees are muted to provide the best user experience possible. So if you have a question, please feel free to use that Q&A button. And lastly, the webinar is being recorded and a link will be sent to you shortly after the webinar ends. Today's presenters are Dan Catlett with us from Aktion. He will be giving us a short introduction of who we are in some of our recognitions. And then we also have John Regan and Evan Owens joining us from the Avalara team to give us more information about today's presentation. So with further ado, hi Dan, it's great to see you. I'll turn it over to you.
Thank you, Brittany.
Once I get through the agenda here. So today we're going to talk about Aktion and Avalara, how tax compliance has changed over the years, the cost of tax compliance if it's done manually, some tips to streamline tax compliance, and a Q&A session there at the end. So here we go. I'll hand it over to Dan.
Great. Thank you, Brittany. So thank you, everyone, for attending today. I'm Dan Catlett. I'm with Aktion Associates. And as you can see, we're over 200 employees. We have about 6,500 customers. We focus on infrastructure, national ERP software in the architectural engineering and construction and real estate space, as well as distribution and manufacturing. We are a value-added reseller for 4 products, which is Infor, Sage, Deltek, and Acumatica. We do host software, so we have 2 company-owned data centers. One's in Maumee, Ohio, and the other's in Charlotte, North Carolina. And as you can see, some of the accolades that we've achieved and won as a top value-added reseller.
Thanks, Dan. Hey, everybody. This is John Regan from Avalara. And Avalara exists to solve a problem that almost every company has. That's trying to keep up with tax compliance. It's a statutory requirement. Every company has to do it. And it's very difficult, especially in the states, to get that done because the country was founded on states' rights. So there are tax rates and tax rules specific to each state, each tax jurisdiction. It's pretty crazy how complicated tax is in this country. So we tag along on the ERP sale. We connect into everything that Aktion provides. That would be Infor Solutions, Acumatica, Sage, you name it. And it's a pretty smooth, seamless integration. All those integrations are time-tested and very efficient. And we've been partnered with Aktion for, probably over a decade now. So we appreciate that partnership. A little bit about Avalara. We've been around for a few years. Since 2004, we were born in the cloud. We're growing like crazy. We'll be over $1 billion company this year. On an annual basis, we process over 30 million documents a year. We have over 1,200 signed integrations into just about every ERP and shopping cart of note. Our flagship product, Avatax, is a workhorse, processing almost $34 billion or billion APA calls every year. More than 4 million returns, over 30,000 customers across 95 countries. Now let's look at what's happened to tax compliance over the years. Specifically since 2018, there's been a lot going on in the tax compliance world. It's an interesting story. It all started with a Supreme Court ruling back in 2018, South Dakota versus Wayfair. You might have heard of it. Back then, or prior to this ruling, nexus, or the obligation of a company to have to collect and remit sales tax to a state, that nexus, that sales tax obligation, was triggered by a physical presence. If the company had people or products or buildings in a state, then they had obligation. They had nexus to that state. And that was fine and dandy for about 30 years. And then along came the Supreme Court ruling that turned that physical presence doctrine on its ear. The physical presence trigger for nexus became secondary to this new type of nexus called economic nexus. What that means is a company's obligation to collect and remit to a state was now determined on how much revenue the company sells into the state, not necessarily whether there's a physical presence. The physical presence was secondary. So the idea of economic nexus, which came out of the Wayfair ruling, caught on because it drove sales tax revenue to the states. So states adopted economic nexus laws, and now there's actually 45 states that took on those laws, and now the economic nexus is the law of the land, so to speak. And it makes economic nexus takes an already cumbersome, already burdensome tax compliance process for the typical company and makes it even more difficult because the thresholds, the revenue thresholds in the economic nexus laws vary from one state to another. It can be as low as $100,000 in some states and just 200 sales transactions. There's a common misconception coming out of this ruling that applies just in that it applies just to online merchants. That could be farther from the truth. This economic nexus can apply to digital goods, companies that sell services, and B2B sellers as well. I'll get into that a little more deeply in the next slide or two. Bottom line is this ruling impacts so far 88% of businesses who say that the decision impacts how they do the business. So that's a huge impact coming out of this ruling. I'll show a few maps here in the next few slides, which is kind of visually exemplify what I'm talking about here. The economic nexus thresholds vary by state, as I just mentioned. In the orange states, those are the larger states, the states that do more commerce than the average state, like California, Texas, and New York. Their threshold is $500,000. Then you have some at $250,000. Then you have some at $100,000. How you keep up with that, if you're trying to keep the company compliant manually, I'm not sure. It's very difficult. In accounting, you have to take all of the revenue coming in from all of the different streams, the online stream, the direct sales stream, maybe the point of sale stream. And you have to bring that in and then slice and dice it so that you know how much each one of these thresholds is within each state, and what you have to keep track of the revenue, and if you're getting close to or crossing this threshold by state. So that makes the compliance process a lot more difficult than what it was prior to this ruling. I mentioned that there's a common misconception that the ruling applies only to online sellers. It actually even applies to tax-exempt sellers. In this map, all the green states, they exemplify the states where the economic nexus thresholds include tax-exempt sales. So what does that mean if you're selling tax-exempt? Well, it doesn't mean that you all of a sudden have to collect and remit sales tax to those states. But what it does mean is that you need to register in those states, you need to manage exemption certificates for your customers in those states, and you have to file $0 tax returns. And most tax-exempt companies prior to this ruling, didn't have to do any of that. So there's a big learning company for tax-exempt sellers in the accounting department coming out of this ruling. Here's the bottom line impact of the Wayfair ruling for the typical SMB. Bottom line is that the company's nexus increases 6 to 9 times after the ruling. So you're taking, like I said, an already burdensome process, and you're making it 6 to 9 times more complicated. That's why our phones at Avalara are ringing off the hook from folks in accounting or the controller or the CFO who have gone through a nexus analysis. And this is a real eye-opener, and they realize that There's so many new states that they're now obligated to. They don't know how to manage that. It's such an increased burden on their staff. They're calling us to ask how we can relieve this burden, how we can automate the process. Looking at the colors on the map here, let's start with the gray. For the typical company, the states that are in gray are like the typical states that a company would have nexus to prior to the ruling. Those states that have a lot of commerce going on: California, Texas, Michigan, and New York. So after the ruling, the company now has all of the states in orange as well, where they've exceeded the economic nexus threshold. So that's the 6 to 9 times increase that I'm talking about. And the yellow states are states where they're approaching the threshold. So this is a real eye-opener from anyone in accounting who has to manage the compliance process. They have to figure out, well, how are we going to do this when things became so much more difficult? And then after the ruling, we had a pandemic in 2020, and a lot came out of that. And now there's inflation, and all this affects sales tax compliance as well. The economic slowdown reduces tax revenue, so that means states need the money from the sales tax to build the bridges, the schools, the roads, and everything that they do for our society. So they're hiring auditors now in record numbers. Bottom line is audits are increasing. They're not necessarily in person anymore. Coming out of the pandemic, we had this idea of webinars or communicating remotely, which we're doing right now. That applies to audits as well. So it's no longer if a company is going to get audited, it's more like when. And states, to keep that flow of tax revenue coming in, despite the economic downturn, they're looking to tax things that they didn't used to tax before, such as digital goods, services, and they're leveraging technology. States are cooperating to run remote audits and share taxpayer targeting data. So it's a good thing to have all your ducks in a row compliance-wise nowadays. So let's look into what it costs the company to do tax compliance manually. Let's try to quantify that. But first of all, let's look at the job to manage compliance manually from a higher perspective. Look at this map here. To me, it looks like a jigsaw puzzle that my family would put on the kitchen table at like Thanksgiving or Christmas, and everybody comes in and we all try to put the puzzle together. Well, this is one complicated puzzle because it's made up of 12,000 pieces. Those are the 12,000 jurisdictions across the country. Within those jurisdictions, there's 35,000 sales tax rates. How does an accountant who's assigned to tax compliance keep track of all that when at any one time 20% of the boundaries of the rates are changing? It's a moving target, and I don't know how it can be done accurately. There's also 30 million exemptions for products or services, and 750,000 exemptions to the buyer or the seller for this reason or that. Just further things to try to keep track of in this process. How do accountants do it? Well, they struggle through it. It's a difficult process, and it's rarely done accurately. And what do CFOs, what do tax pros feel, or what do they think will happen if an auditor comes knocking? Well, 75% of tax professionals believe that if an auditor does show up, the likelihood of finding a mistake is somewhat likely to definitely. 75% of tax pros feel that they're not doing it correctly. But they're paying their employees to do the job manually. How much does that cost? Well, if you're an SMB, it's one or two people, likely around $63,000 in salary per year. If it's a larger enterprise-sized firm, it's probably a team of accountants, and the cost to employ them to do the tax compliance manually approaches $400,000. Now let's break that down into the different tasks that have to be done in managing tax compliance. These are the numbers of hours that add up in the process. You have to manage the rules around taxability. You have to make preparation to do the tax returns and file them. You have to manage audits, do the reporting. You have to manage exemption certificates if you're a B2B seller. You have to research the rules on any new products, anything that's happened on your products. You have to make sure you're up to speed on your nexus. And there aren't any states out there that you have obligation to and you don't know about it. And you have to manage use tax as well. All that adds up to about 302 hours. That's annually. That's 2 months of full-time work that a company is paying accountants to handle the compliance process manually. So it's not free if you're doing tax compliance manually. So how do we streamline this? How do we move beyond the manual process and get a system up that is in line with the nice ERP that you're running? And how do we eliminate this high risk, no reward process and make it digital so you can take that valuable talent that's in accounting and apply it to something that would be more beneficial to the company? I mean, wouldn't it be more beneficial if the employees in accounting are making a go or no go decision from a financial perspective on whether to put a new product in a new market? That's a really valuable assignment to someone in accounting versus just trying to keep the company compliant manually and serving the government's needs rather than the company's. So how do we do that? Well, Evan, could you tell us how we do that? Hey, buddy, could you educate us on how this aligns with the Avalara products and how to get this done?
Thanks, John. I'll certainly give it a shot. When we look at an overall tax compliance strategy, we kind of break it down into 5 key elements. The first one, John just spent quite a bit of time talking about. That's where do you need to be registered? Where do you need to be evaluating your tax strategy? Which states do you need to be concerned with making sure you're compliant? That's the first, kind of the most important part, right? Because if you're not registered somewhere, then you should be, then you're exposed to a great amount of risk. So that's the first key pillar in the strategy. And Avalara has a number of ways to support that initiative, whether it's offering a nexus study, which we'll talk about a little bit more detail here, or offering research tools that your accounting department can utilize in order to evaluate the laws for each state and whether or not your company needs to be registered and filing there. The next step in the process is to actually be registered, right? And sometimes companies in the process of evaluating their nexus exposure find that they have a need to be registered in many, many places where they haven't previously been, which brings up a couple of interesting concerns. One is the burden of getting registered everywhere and building out a calendar so that you understand when the filing requirements are and what the tax rates are and all those sorts of things. But also kind of strategically analyzing what exposure you may have created over the previous years by being in a business that was conducting sales in a specific jurisdiction and not being registered. So obviously that creates exposure, and many companies get anxious about the idea of registering and then potentially tipping their hand to that state or jurisdiction that they've been operating there without a resale agreement. So we have licensing solutions that can help you with the actual registration process, as well as consulting to help you with evaluating that risk that you may have created in the past. There's a process called a non-disclosure agreement where you can employ Avalara or candidly a CPA that you work with locally or a tax attorney to approach various states to let them know kind of anonymously that you may have exposure and pre-negotiate a settlement. So that's part of the overall registration strategy that most companies employ once they find that they've created exposure. And then you have the calculation part, right? I mean, it's pretty simple to know what your sales tax is going to be when you walk into a local store. But if you have a taxable sale and you have taxable sales all over the country, it can be pretty burdensome to stay on top of all those rates. So as John mentioned, kind of the foundation, the heavy equipment portion of our solution is the AvaTax solution. That engine is equipped with all those rates and boundaries and everything that you need to calculate accurate sales tax rates. And it's constantly managed and updated by a team of over 100 people at Avalara, whose sole purpose is to make sure that every rate is updated appropriately and in a timely way so that when a transaction occurs, the correct rate is applied to the invoice. And then probably the biggest thing that's going to matter to the folks on this call is the tracking and management of exempt customers, right? And that's a process that by and large historically has been done in a very manual way. Many companies are using filing cabinets or banker's boxes. A lot of times the origination of an exemption certificate is managed by a salesperson signing up a new account and maybe doesn't have a ton of knowledge in what's required and what the rules are for that particular state for exempt customers. So having somebody or having a process to help you validate those various exemption certificates and make sure that they're accurate and that they haven't expired and that they're accessible and they're for the right customers in the right circumstances is crucial. A lot of times we talk about making sure you get the tax rate right, because if you are supposed to be charging 8% and you're charging 7%, you create exposure, right? You haven't quite collected enough tax. Well, if you're supposed to be charging 8% and you're charging 0%, you've created quite a bit more exposure. And so for that reason, many times exemption certificates are where auditors will start their process, because they just are more error prone than a tax rate in an ERP. They also have the ability with an exemption certificate to take a look at a sampling of the exempt customers that you have, look for errors, and basically create an error rate, a percentage of error, and then apply that to all sales. And then the company is now burdened with, kind of digging in there and finding out how many that they can substantiate and whether or not they're just going to be paying fines on that error rate. So Avalara automates that process. Some of you might use a document management system to electronically store those documents if you've moved beyond the banker's boxes. But with our solution, we're able to actually validate the documents. We're able to keep track of expirations and proactively notify you and or the customer of expired exemption certificates. And then that information feeds directly into the transaction. So if we know that the customer's exemption certificate is expired, or maybe rather we didn't know, the system will tell us that, and it'll charge tax and keep the business compliant so that they aren't not collecting the tax. And then obviously if the customer believes they should be exempt, then they'll reach out and update it. So that's our solution for managing exempt sales. And then finally, paying all the money to the state, right? You don't want to keep it. Better off to not take it than it is to keep it. But ultimately, you have to keep track of all these filing calendars, right? And some states charge or ask you to file monthly, some quarterly, some annually. And since we've collected all that information and have all those documents available, we can file those returns on your behalf and take that burden off of your accounting team. As John suggested earlier, there's, when you look at overall what some of the accounting department's responsibilities are, everything from collecting AR to, like John said, looking for new products and new markets, or if you have the headcount opportunity to add to your customer service staff, those are all places where we've seen companies take the money that they've saved from automating this process and turning it into revenue generating activities. So one of the things that we've talked about quite a bit is understanding where you have, where you have Nexus, and that's a big animal for people to take on. It's one of those things that you want to do because you need to, but you're not really sure where to start, and you have so many things on your plate already. And one of the things that we've done is we've made this available through our partnerships exclusively to have a Nexus assessment done for free. So if you just reach out to Avalara and say, I want to find out more about Nexus, that one of our kind salespeople will be happy to charge you $4,500 for that service. But through this webinar and through our partnership with Aktion, we would like to extend the offer for you to get that service for free. So if you just reach out to your Aktion account manager and let them know you're interested in an Avalara free sales tax risk assessment, they'll connect you with us and we will get you a link so that you can purchase that for no charge. And they'll take you through the process. You'll fill out a questionnaire with some of your business activity and where you're doing business today and how you're doing business today. And we'll let you know where we see potential exposure and where we don't. So if you have any questions about this, or you're concerned about your Nexus exposure, I would encourage you to take advantage of that, because it will give you a lot of great information. And like I said, for the time being, it would be at no cost.
That's a great first step.
It is. So if you give us 2 minutes here, we'd like to show you a quick video that kind of walks through our exemption management solution. I think it'll be good for you to kind of see how that process works with Avalara.
Manually collecting, validating,
Sorry about that. It took so long, I thought I had not clicked it right. So let's try that again.
Manually collecting, validating, and maintaining exemption certificates for your many customers can be a strain on your business. Avalara Exemption Certificate Management, or ECM, automates certificate management by identifying certificates that are missing or expired, automatically sending requests to your customers, and reviewing new certificates as they arrive. It's easy to get compliant and stay compliant with Avalara ECM. It can be used as a freestanding platform in combination with AvaTax for real-time verification and calculation, or to integrate with other tax calculation engines. ECM allows you to request certificates from your customers by sending a link to Avalara's secure online certificate portal, where they will be walked through a simple process of selecting and creating the correct certificate for their business, dramatically improving certificate accuracy and allowing them to manage their own certificates. Bulk and automated email campaigns are easy to set up and help collect certificates that are missing, invalid, or about to expire. As a business, you're responsible for making sure certificates are valid, which can be difficult to determine. If they're not, then the tax liability falls on you, not your customer. This is why ECM's validation engine with optical character recognition is so important in this process. For many standard forms, ECM scans the image, confirms the certificate type, then digitizes the data on the document and tells you whether the certificate is valid. If ECM determines the certificate is invalid, it will send an automated request for a new certificate from your customer. This automated validation reduces errors and improves compliance, helping to decrease your overhead costs. Avalara's ECM products are the best-in-class solution in exemption certificate management, setting new industry standards. In addition to providing the best security practices to protect customer data, other key features include automated tax ID verification for supported states, a forms and tax content help library, integrations with over 35 accounting and e-commerce platforms for easy customer management, integration into leading third-party tax engines, and tools that help you collect certificates at the point of sale and get them verified in real time. If you would like our team of experts to manage your exemptions for you, ask us about ECM Managed Services. Whether you're a small business or a large enterprise-sized organization, we have a solution for you. Learn more at avalara.com.
All right, and then I think this is the last thing we're going to touch on today. Is there's a consortium of states that quite a few years back put together a program called the Streamlined Sales Tax Program. And what it essentially did was it created a standard set of rules for all member states for kind of encouraging businesses to voluntarily register their companies with those states. And so as part of that process, they created a certified service provider program, and Avalara is one. So you have to be a certified service provider to participate. But for those states where you do not yet have Nexus, but you're maybe starting to approach Nexus, if you join the Streamlined Sales Tax Program, they will, for all volunteer states, they will pick up the cost of calculation and filing from Avalara. So if you through the process of your Nexus evaluation, you find that you've expanded your footprint quite a bit and have a lot more exposure than you thought you did before, this would be a great way to offset the costs of implementing an automated solution to manage those tax compliance concerns for you.
Evan, let me get this straight. Under the SST program, the states pay Avalara, and the services from Avalara to the customers are free.
That's true. Yes, sir.
That's a great deal. That's a good deal.
It is. So with that, if there's any questions, we're happy to field those.
Yep, I'm just looking here, Evan. It looks like we do have a little bit of time, and it looks like we have one question here. So I will push it to the screen. Whoever wants to answer it, feel free to answer. It looks like just a question on how Avalara is implemented.
You want to take that one, John?
Sure. the good news here is that we already have over 1,200 integrations pre-built. So it's not a matter of having to build something custom from scratch that's untried. Our integrations have been around for years, time tested, solid. So we start with that. And our partner Aktion is actually certified to implement Avalara. So what that means to you is that you'll get the same white glove treatment that you experience working with Aktion, and they're implementing and supporting your ERP, because Aktion would now be implementing and supporting Avalara as part of that ERP. So that connection is great for those reasons, as well as, there's less finger pointing. Everyone knows each other here. Aktion is trained and certified. So the bottom line is that the implementation it goes rather smoothly. And the implementation can be done at your pace. We see most accounting departments try to, or a lot of accounting departments try to do this as maybe a couple hours a day, or maybe knock out a few days during a week over a course of time. The total implementation time, of course, depends on how complex your compliance situation is, how many products you need to put in there and align with our tax codes. And but overall, you could look at the implementation process as low-hanging fruit to add this on because the integration is already there, and we have trained professionals that you're already familiar with.
Perfect. That sounds good. And with that, I will go ahead and advance to our final slide here. I want to thank everyone for joining us today in this webinar. Evan or John, do you have any last words before we would go?
Well, thanks everybody for joining us. I appreciate it. And if we can help, please reach out to us or your Aktion representative, and we'll take this the process into automation from manual for you. Thank you.
Thanks.
Thank you, Evan and John.
And with that, I'll say
Thank
thank you to everyone for joining us today. I know, as John said, if you have any follow-up questions after the webinar, you would be more than welcome to reach out to your Aktion rep or even Avalara. So with that, we will call it a day. Everyone have a great day.